Welcome, everyone. This is our first session with our lawyers from Tevetoglu Legal. They will be taking us through what earning through Project Catalyst means for us, all the individuals that are earning through littlefish and earning through Project Catalyst in general. So they're going to be answering your questions at the end. With that, I'm going to pass it on to you guys. Take it away.
Thank you. Can you let me share some documents, PowerPoint?
Go ahead.
Thank you. Can you see it?
Yes, now I can see.
Okay. Hello and good night to everyone. Tonight, our attorney Hasan Ömür and I will be talking about taxation of earning through Project Catalyst. Before we start, I would like to cover what we are going to examine tonight. First of all, we will focus on taxation of crypto assets, the necessity to tax crypto assets, and different states, applications, and approaches in this regard. I believe there is no need to lecture you about what crypto assets or blockchain technology are. I believe you are more than familiar with all of these, probably more than us. However, what I want to talk to you about is how crypto assets are sometimes perceived by public authorities. At first, financial institutions and authorities didn't really see crypto assets and blockchain technology as a threat to classical financial system, the financial system that ordinary people, everyday people use and know. However, as the time goes by and the volume and value of this ecosystem grew to the point that it exceeds most of the countries. Also, due to its nature, blockchain technology and its derivatives challenged the regulations, especially the ones like anti-money laundering, combating the financing of terrorism, and tonight's topic, taxation and tax codes. Despite its enormous size and the challenges that this new ecosystem brings, many countries lack a complete and discrete legislation when it comes to crypto assets. I mean, most of them don't have a legislation titled Crypto Assets Law, Crypto Assets Code, Blockchain Technology Code. And this results in the perception of crypto assets and its ecosystem as a Wild West. However, the idea of Wild West is actually far from being true. The fact that there is no specific regulation for crypto assets does not actually mean that there is no applicable regulation to them. Basically, just because there's no specific piece of regulation, it does not mean that anyone can do anything they want, whenever they want, however they want, with cryptocurrencies, assets, or blockchain technology. If applicable, and we see them being applied, general rules of law and other relevant legislations where they find applicability may and shall be applicable to crypto assets and the transactions that are conducted with them. And we see them happening every day, general rules of law applied to them. So, moving forward, there are actually two different approaches on how to regulate crypto assets. And first approach is coming up with a brand new piece of legislation that specifically focus on crypto assets or blockchain technology. And the second approach, on the other hand, is it aims to integrate crypto assets to law that is currently in force. Regardless of the approach, it is quite objectionable to perceive crypto assets as Wild West. It is a dangerous approach to see crypto assets ecosystem as a Wild West. So be careful on that. Now I would like to talk to you about necessity to tax crypto assets. To be precise, current market volume of the crypto assets is above $870 billion, and actually the volume was much higher. Like last year, it was $3 trillion or something like that. And on the other hand, Turkey, with 80 million population and being the 20th biggest economy, has the GDP of only $815 billion. As you can see, the blockchain and crypto asset ecosystem exceeds most of the countries. And therefore, it is unimaginable to think an untaxed sector that is as big as Turkey's economy. Since we covered the misconception of Wild West and clarified the necessity to tax crypto assets, now I would like to talk about the taxation of crypto assets in general. The fundamental principle of taxation in most legal systems is legal qualification of the asset or the transaction itself. How crypto assets are legally qualified determines how they are taxed. The classification of crypto assets as money, e-money, investment instruments, securities, commodities, or as something else that I can't remember right now, may result in different kind of tax consequences. And the main obstacle in this regard is the fact that countries and therefore different jurisdictions don't have a uniform approach in this matter. I mean, some states, countries treat crypto assets as money. They consider them as money and apply their regulations regarding money. And some states that they are property or investment instruments and apply the regulations that they have on this matter. So differences in legal qualification of crypto assets make this problem a quite challenging one. This is exactly why it's crucial for taxpayers to closely examine the approach of their jurisdiction to which they are subject to. I forgot to move the slide, sorry. Now, earning methods through Project Catalyst. Nowadays, as you know, ideas are almost free to come up with, but most of the time it requires a significant amount of capital. And unfortunately, people with brilliant ideas, promising projects, sometimes don't have the necessary money to carry out these ideas. And Project Catalyst actually offers some kind of solution to that, and its function is to fund the proposals that are found to be worthy of funding. With that being said, we come across with the first earning method, being a proposer. And as being a proposer, the proposer gets fund to carry out its project, perform its ideas. And second earning method is to become a personal assessor, veteran proposal assessor. The assessment of proposal assessors and veteran proposal assessors are actually quite crucial because their assessments carry out the role of guidance for the voters. What I mean by this is the fact that assessments made by the assessors actually has the potential to influence or shape the voters' vote. Since we talk about voting, the third earning method is being a voter. Those who participate in voting process basically gets rewarded for their valuable voting contributions. Now I will be talking about taxation of project catalyst funding in Turkey. First of all, where there is no relevant legislation, there can be no tax. It's like no punishment without law. In order to tax something, an asset or a transaction, there shall be a law that says this asset or this transaction is taxable under these circumstances. With that being said, in Turkish law system, earnings of the proposers, proposal assessors, veteran proposal assessors, and voters seems to be eligible to be considered as self-employment income. So, what is this new term, self-employment and self-employment income? In order to be considered as self-employment, we have actually 4 criteria, which are as follows. First one, self-employment activity shall be performance of a non-commercial work. So the work you carry out, the activity that you carry out, perform, shall not be a commercial one. And the second criteria is this non-commercial work shall be based on personal work, scientific or personal knowledge or professional knowledge. And more importantly, it shall not be based on a capital. So the one that carry out the activity, self-employment activity, shall conclude this activity thanks to her mind, not its pocket. It shall not be based on money. It shall be based on the self-employee's personal or professional knowledge and work and time. The third criteria is self-employment shall be performed under personal responsibility and account. So the self-employee shall not be acting on behalf of someone else or account. Fourth criteria is there shall not be an employee-employee relationship between self-employment and whoever the other party is. What we mean by this is that in Turkish law, employment relationship is strictly and clearly defined. We know what employment relationship is, and if there's an employment relationship, there cannot be a self-employment. This is what we mean by this, and all of these criteria shall be met at the same time. If one of them is missing or not met, we cannot say that there's a self-employment income. And from the nature of this process of project catalyst, we believe that the earnings of the proposers, proposal assessors, veteran proposal assessors, and voters shall be considered as self-employment income and taxed accordingly. So, who is the taxpayer of such income? We said that there is an income and this income is self-employment income, but who is going to pay this? Who are they? In Turkish law, there is a distinction between taxpayers. One is fully fledged taxpayer and the other is limited taxpayer. Fully taxpayers are the ones that are resident in Turkey and those who resided in Turkey more than 6 months within a calendar year. And the real persons who are not resident in Turkey are considered as limited taxpayers, and they are only taxed on their earnings and revenues that are generated in Turkey. So if you fall into the scope of one of these, you will be subject to Turkish tax code, Turkish income tax code. and please be careful on this matter. Moving forward, when and how to pay these taxes. One who is subject to Turkish tax code shall issue an annual income tax form to Turkish Revenue Administration. And deadline to issue that annual income tax form is the last day of March. Okay, we said that there shall be an annual income tax form to be issued, but what happens if you don't issue this form? In case of not issuing an annual income tax form, you may face some serious fine. And actually, you will be asked to pay a fine for not issuing a form. So you didn't issue form, you will be fined for it. And the tax that you have not paid will be asked to be paid. And thirdly, the interest of the default. Since you didn't issue the form, you defaulted on paying your taxes, and there will be a interest of default on that tax, and that will be asked to be paid. And what is the tax rate? Actually, there is no tax rate gradually rise, and till 32,000 Turkish liras, it is 15%. For above that amount and till 70,000 Turkish lira, it is 20%. And this tax rate gradually rise to the point that it is 40%. So it starts from 15% and ends up to be 40%. Depending on the amount that that's taxable. Last but not least, there is a public authority called MASAK. MASAK is the Financial Crimes Investigation Board, and this is important because crypto asset service providers are now subject to the anti-money laundering and prevention of financing of terrorism legislations. And MASAK is the leading public authority in this matter. And crypto asset service providers are obligated to report suspicious transactions to MASAK. So if you are concluding a transaction in a crypto asset service provider, if that crypto asset service provider finds your transaction to be suspicious, it is obligated to report your transaction to MASAK, and MASAK will conduct a research on the nature of your transaction. And such suspicious transactions can be related to the amount of the transfer or the frequency of the transaction. For example, if you, transact an amount such as $100, probably you will not be noticed and asked to clarify your transaction. However, if you conduct a transaction that exceeds the amount of $1 million, you will probably ask, what is this, where did this money come from, or etc. And size and nature of the transactions and the ID confirmations and etc. Is quite important on suspicious transaction reporting. And this is actually it from me. I will now leave to Asena.
Thank you, Batuhan. Thank you for the presentation as well. So moving forward, our first topic is about USA, obviously. In USA, virtual currencies and cryptocurrencies are mainly separated in definitions, but we can say that cryptocurrencies are treated as a type of virtual currency as well. So as we all know, virtual currencies are a digital representation of value. Also, they're treated as property in the US, so there's a difference. Actually, as I know, if I'm not mistaken, the USA is only treating cryptocurrencies as properties under their tax law. So since it is considered as a property, general tax principles apply to cryptocurrencies as well. So if we can move forward with the next page, Batuhan. Yes, so the IRS states the possible transactions that may result in tax consequences. You can see them from here. I will read them as well. So sale of digital assets, exchange of digital assets for property, goods or services, exchange of trade of one digital asset for another, receipt of a digital asset as payment for goods or services, receipt of a new digital asset as a result of mining and staking activities, receipt of a digital asset as a result of an airdrop, use of digital assets to pay for goods and services, any other disposition of a financial interest in digital assets, receipt or transfer of a digital asset for free that does not qualify as a bona fide gift. So we can say every kind of transaction can be possible tax consequences. So the IRS says that when you receive a property, including virtual currency in exchange for performing services, whether or not you perform the services as an employee, you recognize ordinary income. So by receiving a cryptocurrency for performing services, whether you're an employee or not, it can be considered as an ordinary income. So the fair market value of the cryptocurrency received for services performed as an independent contractor would be considered as a self-employment income, and it will probably be subject to self-employment tax. This is kind of similar to Turkish law as well. So incomes must be reported and declared to IRS. Otherwise, you can be subject to fines. So transactions using cryptocurrencies must be reported to IRS in US dollars. So the calculation of income is the fair market value of cryptocurrencies in US dollars at the date it is received. If income in crypto assets worth at least $600 through the course of the trade or company, you must notify the IRS. That's I don't know about the updated amount, but this was the $600 was the cap for this. Maybe we can talk about tax evasion. Yes, I agree. Tax evasion regarding crypto assets. I can give you some examples, such as not reporting capital gains from sales or other dispositions of cryptos, underreporting capital gains from sales or other dispositions, not reporting additional income received in cryptocurrencies, again, not reporting business income received in cryptocurrency, not reporting wages paid in cryptocurrencies. So especially in the current bear market with the losses many investors are seeing, it can be very tempting to avoid crypto taxes from gains earlier on in the financial year, but you shouldn't avoid crypto taxes because it seems that IRS already follows your cryptos. It is very similar to Turkey as well. The IRS has a lot of avenues to find out about your crypto investments. Not only do many crypto exchanges already share KYC data with the IRS, but the IRS has also previously used John Doe summons to legally compel crypto exchanges to share user data. If you ask what is a John Doe summons, it is actually an investigative tool used to determine the identity of unknown individuals who IRS has reason to believe that they have been violating tax laws. So many crypto exchanges like Coinbase, Crypto.com, and Kraken, they issue 1099 forms to certain US users. So whenever you receive a form of such, the IRS does receive the form as well. So if you previously avoided crypto taxes as you weren't aware of your tax obligation, I would recommend a voluntary disclosure. It can help you to avoid criminal proceedings if you have previously evaded assessment or payment. But provided that, obviously, IRS hasn't initiated proceedings already. So when you make a voluntary disclosure, you agree to cooperate with IRS and pay any due taxes in full in order to avoid criminal proceedings. So I think we can move forward with European law. Okay. Depending on the type of cryptocurrency transactions, the taxation of cryptocurrencies and transactions using them is governed by the national regulations of each member state. So a digital currency is typically considered for tax reasons as an intangible asset or commodity rather than as money or currency. Since there is no common decision to cover European countries yet, European countries apply their local legal regulations, as I mentioned. So recently, the European Parliament adopted a resolution. It's called Impact of New Technologies on Taxation. The text actually states that different types of crypto assets may result in different types of tax treatments. So we can say that there is no unity in European member states regarding those rules. With the resolution states that the member states shall implement and determine their own taxation rules, but it should be in accordance with the treaties as well. So EU is mainly trying to define the framework of legislations in cryptos and their taxation. If in the possible future, if a definition is met and applicable to all European members, we can maybe further talk about implementing such legislations in the future, I think. As that being said, we can say that European members apply their own tax regulations, which are in general similar to each other, such as self-employment tax or personal income tax regarding earning and founding through project catalysts. So tax authorities in EU currently lack the necessary information to monitor proceeds obtained by using crypto assets, which are easily traded across the borders. So this severely limits their ability to ensure that taxes are effectively paid, which means European citizens may lose their tax revenues at this point. So there's a new proposal to improve member states' ability to detect tax frauds, tax avoidance, tax evasions by requiring all crypto asset service providers to report the transactions of clients residing in Europe. We will come to that. So accordingly, we can say that similar to Mossack in Turkey and similar to IRS in the US, we can say that KYC proceedings may apply in the future as in reporting transactions to relevant authorities. The directive also aims to establish a common minimum level of penalties for situations of serious non-compliances, such as the complete absence of reporting despite the administrative reminders they will receive. The draft, the one I talked about, are aimed to be enter into force on 1st January 2026. So I think there's a long way to go. We will see. So we can maybe move forward with the Australian law. Thank you. Okay. According to Australian Taxation Office, crypto assets are treated as digital representations of value that one may transfer, store, or trade electronically. There is no discrete legislation regarding taxation of crypto assets in Australia, so this doesn't mean they are not taxable. Despite their differences, these crypto assets are subject to the same tax rules as other general assets. Tax treatment of crypto assets will be determined according to their nature and how and why they're acquired. However, this tendency is generally applied to acquisitions of crypto assets for investment purposes. Also, rewards that members of the ecosystem may get for staking their crypto assets are eligible to be taxed as ordinary incomes. As a conclusion, one who earns cryptocurrency and is subject to Australian tax law shall act in the same way as one who does not earn crypto. So we can say that they're on the same level, but there are differences on capital gain taxes. So if you hold a crypto asset as an investment, it will not be exempt from gain tax as a personal use asset. I will talk about personal use asset moving forward. In general, a capital gain tax event happens when you dispose of a capital gain tax asset. For the purpose of crypto assets, that may be when you sell a crypto asset, gift a crypto asset, trade, swap, exchange a crypto asset for another, convert a crypto asset to Australian foreign currency, buy goods or services with those crypto assets. So a crypto asset is a personal use asset if you keep or use it mainly for personal use. The most common situation here is to buy items for personal use or consumption of it. If it is a personal use, you can be exempt from taxation in Australia. So maybe I can give you some examples about personal use. When you dispose of it as a crypto asset you acquire and use in a short period of time, to buy items for personal use or consumption is more likely to be a personal use asset. But if you hold them for some time and you use it afterwards, or you only use a small proportion of it to buy items for personal use or consumption, it is less likely to be a personal use asset. So that being said, crypto assets are not personal use assets when you keep or use them as an investment and a profit-making scheme in carrying on a business. Thus, these actions I mentioned, they are subject to taxation as well. Okay, do I have more? You may be, by the way, you may be able to reduce capital gains using the capital gain tax discount if you hold your crypto asset for at least a year. But this doesn't mean that you will be exempt from it. So you may only receive a discount for this, like for holding it. But other than that, it doesn't mean that you're exempted from it. Okay, we can move forward with the Canadian law. Yes, like in Australia, crypto assets are accepted as digital representations of value, as always. According to the Canada Revenue Agency, Canadians have to pay taxes on cryptocurrencies. However, we can say that it is considered as a legal tender. So they may be used as a medium of exchange if the parties are willing. The CRA has a tendency to treat crypto assets as commodities. When it comes to taxation of them in Canada, the crypto asset transactions are treated as business income or capital gain. This depends on the nature of the transaction. Furthermore, we can say that taxpayers who are subject to Canadian tax laws shall establish nature of their crypto assets activity. Whether these activities result in income or capital gain directly affects the way these revenues are treated for tax purposes. Rounding it up, we can say that the CRA does tax some cryptocurrencies transactions. Canadians do not have to pay taxes for holding cryptocurrencies. Taxpayers are subject to pay capital gains or business income tax after selling or mining cryptocurrency. And the percentage of net profits that are taxable depends on whether the profits are classified as capital gains or business income. We talked about capital gain tax before, and it's very similar to what's going on here as well. As I said, Canadians do not typically have to pay any taxes to hold a cryptocurrency. However, doing any of the following, I will tell you, can lead to tax liability: gifting cryptocurrencies, selling cryptocurrencies, exchanging or trading cryptocurrency, converting the cryptocurrencies to Canadian dollars or other fiat currencies, buying goods and services. So this is very similar to Australia as well. Okay, well, next topic is this. No, I have some little bit to tell more in Canada. Okay, this area uses some science to categorize cryptocurrency as business income. I didn't tell you about this. If there's an intention to make a profit, regardless of the short-term profits, a product or service is promoted by doing this. The activity is for commercial reasons, done in a commercially viable way. And activities are done in a business-like manner, such as acquiring capital assets or making a business plan or an inventory. So as a note, we can say that CRA considers cryptocurrency mining, trading, exchange to all be cryptocurrency businesses at this point. What else do I have to say? Oh, and other topic. Those who earn cryptocurrencies for their work will have to report it as an income. So this involves reporting its value at the time of acquisition. When someone sells a cryptocurrency in exchange for another cryptocurrency, this is also taxed as a capital gain. To calculate the cryptocurrency's value at the time of sale, you should look at the value of the cryptocurrency being sold at that point. Yes, we can move forward to UK. Thank you. Okay, according to Her Majesty's Revenue and Customs, crypto assets are considered as digital representations of value or contractual rights, which can be stored, transferred, or traded electronically. Again, it depends on the nature of the transaction and use of them. So it is not really important how the issuer or user of the crypto assets defines that asset. What really matters when it comes to taxation is how and why these crypto assets are used. So the UK has not yet implemented a discrete regulation regarding the taxation, but earnings through crypto assets are basically subject to general tax rules and principles, such as income tax or capital gain tax, which we talked earlier. So if the nature of their relationship or transaction constitutes a taxable action, then they are subject to general tax rules and principles of the UK, regardless of whether they earn through crypto asset or not. So under Her Majesty's Revenue and Customs rules, taxpayers who do not disclose their gains could face a 20% capital gain tax, plus any interests and penalties are like up to 200% of any taxes due. So those found to have evaded the tax could also face criminal charges and jail time at this point. So if I'm not mistaken, your first £12,000 of capital gain is tax-free, but this number can be updated as of today, so it should be checked. It can be valuable to keep this number in mind when disposing of your cryptocurrency. I believe it's like £12,000 and £12,300 to be exact. So your tax rate is determined by how much income you receive in a given year. As a result of disposing of your crypto in a low income year can lead to significantly reduced tax rates. So I would recommend disposing your crypto in a low income year. We can move forward with German law. Please let me know if I'm moving too fast, because sometimes I speak too fast. Okay. So crypto assets are taxed in Germany. So in Germany, crypto assets are viewed as a private asset, unlike properties. So it's different from USA. I am having troubles with spelling this. So if there is anyone who can spell, please move forward and help me out. No one, I guess. Okay, no one. I would say BCZT for now. Okay, they state that any additional income from crypto assets such as mining, staking, or airdrop, as well as short-term capital gains from crypto assets, which are held for less than a year, are subject to income tax. So this means if you hold your assets over a year, you may not be subject to income tax at all. So this is very different from other countries, as we talked. Therefore, rather than being subject to capital gain tax, crypto assets are subject to individual income tax in Germany. All short-term crypto asset gains are subject to income tax. So the rate is, you can be subject from 0 to 45%, if I'm not mistaken. It also depends on your total income for that tax year. So Germany won't require you to pay any tax at all on your crypto assets gains if the assets are held for a year or more, as I mentioned. The BSCT clarified that receiving or earning crypto assets are taxed as income tax only if it is being received in exchange for a service. So this means that if one received or earned crypto asset without providing any service or doing any specific action, such earning can also be considered as a tax-free earning. So lastly, tax-free situations in Germany. Yes, if you hold your cryptocurrencies for 1 year or longer, if your total profits from short-term gains are less than 600 euros during the tax year, if your total income from crypto is less than 256 euros during that tax year. Okay, lastly, we made an addition about Belgian law upon a request. So I would like to also talk about that a bit. So in Belgium, crypto assets and their taxation remains unregulated at this point. So the STI states that the sale and transaction of crypto assets are considered as miscellaneous income. But this only, in my knowledge, this only applies to companies in general. So if you're an individual, you can be subject to self-employment or personal income tax. So we have to talk about that. However, there's a principle called prudent man. Maybe you are aware of that principle. So if you follow the conditions of a prudent man principle, you can remain tax-free as an individual. But the conditions are pretty, harsh. It's basically you have to hold your crypto assets in hand. Okay, let's talk about this. I think we have that on the next page as well. or not? Batuhan. Yes, here it is. So the individual has never been active in finance sector. The individual's education or profession is not related to crypto assets. Such investment is made with his own gains, and loan is not used in this manner. So the individual didn't use any automated software or engage in mining. The crypto assets had never been sold. The transactions over the years cannot qualify as a business activity. Buy and hold method, as I mentioned, has been used, and the crypto asset was kept for several years. So if the conditions are met, you can remain tax-free at this point. But this being said, it should also be considered that these conditions are evaluated by relevant authorities in order to be deemed tax-free from transactions of crypto assets. So moving forward with this, if your transactions can be considered a normal management of private assets, any gain resulting from it can be exempt from income tax. So what I'm saying is, if your investment do not fall within the scope of the prudent man principle, as mentioned above, and you're taking high risks, it means that you're taking high risk and you're carrying out transactions with a speculative character in the eyes of the Belgium authorities at this point. In this case, the capital gain will be taxable as a miscellaneous income, to which the rating is, as I believe, 33% right now, plus committal taxes. So it may apply for you. The next point is, okay, yes. Any Belgian company or foreign entity that are active in Belgium that generates an income or a loss as well from trading cryptocurrencies will be chargeable under the standard corporate income tax rules. For individuals, the matter is more complicated, as I mentioned above. The relevant question is to ask whether your crypto asset activity should be considered a hobby or a trading. So the way you invest in cryptocurrencies will largely affect its qualification for income tax purposes. For questions we received on holding the crypto asset over a year, we haven't come across with a legislation that would confirm that if you hold it over a year, you will be tax-free from it. But I also came across with a legislation saying that if you have a company share and you hold it over a year, it is the share itself, and whatever you're going to gain and sell from it can be exempt from taxation. But I don't think at this point this is applicable to crypto assets. Like I'm not sure, but I am actually positive that we cannot say that they are the same thing. So I wouldn't recommend it is applicable to crypto assets as well. So regarding all of this, this is the end of our presentation. Regarding all of this, we're in conclusion that earning methods through Project Catalyst can be considered as self-employment and subject to taxation under self-employment tax. So my recommendation would be, Batuhan, if you have anything contrary to this, please tell me. We can recommend obliging the tax regulations such as like in countries such as Turkey and US, since the transactions of crypto assets are subject to QIC and other regulations and are followed by authorities one by one. So they are risky. But since taxation, even though in Turkey and US, in like all countries, it is subject to declaring your income. So it may be possible to wait an approach from the countries that we talked about, the European countries, because since they haven't yet put on QIC proceedings as much as in Turkey and US, we can say. So I would say it may be possible to wait an approach from European countries before declaring income if you don't believe that your activities fall into taxable categories, since, as I said, EU authorities' lack of QIC proceedings and following transactions at this. Yes, we can also recommend to do transactions through a more benefitable countries such as Germany or other crypto-friendly countries, if applicable, for this case. Okay, thank you very much for your time. I spoke a lot.
Thank you, Asena. Thank you, Batuhan, for the presentation. I think we have a lot of questions. And George, what is your question? Let us know.
Yeah. Appreciate the presentation. It was very good. Thank you,
Thank you.
and Sina. The question is regarding the proposer versus the difference to PA or VPA, where it is individual, voter is individual, but the proposer is like a team. For example, Littlefish is a team foundation. So it can be a company. For us, we could be
Yes.
from India is Conma as a team or Littlefish as a team. So so how do we, so that distinction, so self-employed, if it is a single person proposer, makes sense, but when it comes as a team or when we come in as a foundation like Littlefish Foundation, how do we do it?
Well, for companies, we actually talked about gain taxes. So they're the same. It's actually the same for individuals. Yes, self-employment. Companies are under the general rules of taxation for incorporate taxation, for example. We kind of talked about them as well. But what we see from here and the propositions, like the voters, the proposals, they act kind of individual and not attached to yeah, we are attached to community, but we are also an individual and acting individuals, in my opinion. But if you're talking about companies, yes, they will be subject to incorporate taxes.
Also, when there is a company and enterprise, their gains are and incomes and their revenues are in principle considered as commercial, and therefore the relevant tax codes in this regard will be applicable, not self-employment. It's a great question. We will be adding to our document. Yes, thank you. What is FATF? It's Financial Action Task Force. It's the next question, I believe, Çağkan.
Yeah, if you could tell us about those guys, that would be great.
And WASP is the Virtual Asset Service Providers. Financial Action Task Force, actually an international organization that aims to combat against financing of terrorism and anti-money laundering, and many states are part of it. It gives out recommendations and tries to uniform the reporting and other relevant cautions to prevent financing of terrorism and anti-money laundering. WASP is, as I said, the crypto exchange services platforms. I don't see any other question.
They're like FAFT is like a watchdog, so they do AML, CFT standards. They have those standards. They do also try to implement KYC regulations at this point. It's like a watchdog, I would call it.
Yes. Lucas has a question, I think.
Hi. Hi. Thank you so much for the presentation. It's really great to see that we have people trying to learn about all the laws and different countries, and it's great to know that we can start counting on people like you. So I worked in accountancy for a few years, although I was more on the technical side, on the IT side. But we had the concept there of if you have losses for 1, 2, 3 years, and then you have profit, you can deduct those losses when you have profit. Is this familiar to you?
Yes, it is. It's actually does apply in some countries, which I talked about, but we didn't get into much losses. Well, if you have profits and your losses, they do deduct it, and it's actually you can receive a tax rate discount at that point, or it's more smart to do that over those years. That's true.
Okay. One other thing that probably is not going to change in the near future is the granularity of the time frames, which is usually just 1 year for everything. This is the standard thing. Do you see this changing? Do you see exceptions being opened, or any type of shorter granularity in time for these types of fiscal reportings on crypto?
Well, I think 1 year would follow and I think some other countries will join Germany by like holding over a year. You will be exempt from taxation. Some other countries are kind of like, as I talked about Australia, they're trying to approach in that way, but not yet settled about this. So I think it's beneficial for, yes, a year is okay, but do you consider it would be more beneficial if it was like a shortened time of period, or?
Well, yeah, what happens with the volatility we have in crypto is that
Yes.
in the same year, the story can be very long. So you can buy
Yes.
high, sell low, vice versa. You can have profits and losses. And it's a very big time frame where, especially if you had some sort of profit in one form of looking at the numbers, but
Yeah.
in another form. So for example, you may be in a large profit when the turn of the year comes in 1st of January, but when April comes, you may already be in a loss.
Yes, yes.
So you may be accounting for a lot of profit. And when in the end, I see there's one person in Cardano who actually posted a video about this. By the time he had to pay tax on the number he had in January, he had to sell all his assets and just deliver them. That's why I think volatility is going to be a big trouble. But
yeah, I agree. But I haven't heard any proposals on like shortening those terms and shortening the period of times yet. But yes, if well, that would be nice. That would be good. But for now, it's 1 year at most. Yeah.
Okay, thanks.
I have a question, and this connects to the question George has asked and the questions in the chat about taxation in a DAO. So we've talked about if it was an individual, self-employment, that's okay. If it's a company, it's generally corporate law.
Yes.
What if it's the state in between that most of us are in? So the state in between is you may have an actual DAO that is on chain, or a community on its way to being a DAO. It can or cannot have, it usually doesn't have a legal representation yet. It
Yes.
turns into something legal down the line. So at that stage, like take littlefish, for example, we have funded proposals, we get funding, and then we pay out to the community members. Does that change any of the dynamics? Does like anybody from the community working, are they self-employed? How does that affect the dynamics?
The thing is, we don't have a consensus on what DAOs or DAEs are. It is there's a tendency to accept them as a unlimited company, but there is no legislation or court decision on that. And since we can't really say what DAO is under Turkish law, we can't really say it's taxable for this and not taxable for this. And what was the next question? The thing is, the fund that you receive from Project Catalyst and how you spend that fund is actually two different topics. I mean, if you use that fund to pay your employees, and if there's a employment relationship, that will be regarded as income tax for the employee and other things. It is actually two different topics and shall be examined differently and separately.
In my opinion, if you're a DAO, well, if since there is no company, maybe we can like put this in like we are working individually, and it can also be again, since it cannot be considered as a company at this point, self-employment tax. Well, they wouldn't hold back from taxing people, so I would say that this will there be first resolution to this at this point. Yes, well, voluntary-based employment, exactly. It's different from normal company employment, and yeah, like you're acting on your own at this point. Maybe it's can be in a gray area for voters because they are guided through proposal assessors. But still, if you're doing that with your own knowledge, with your own consensus, or like with your own thoughts, then it's voluntary based at this point, and you're like adding up to something with your own knowledge, education, maybe profession at some point. So no one is giving you directives on how to do this and how to do that. Well, there are some directives, there are some rules, but it doesn't define that you have to follow them. And there may be other different thoughts, other different things at this point, other different guidances. So that's what we're saying, actually, if that's more clear for you.
Yes, thank you. So I think that is the critical bit that affects most of us. So we would love to have some like good strategy of how to approach that area. But I feel like it's a topic that we should dive into deeper.
Okay, well, if you have other questions on that, maybe we can move forward with that. Or we can also add, we will make some additions to the document as well after this. So if there are nice questions.
I think Nikhil, you have a question? Did I catch that correctly, by the
Yeah,
way?
yeah, you got my name correct. Yeah, thank you. Actually, I had a point rather instead of asking a question, I had another point of view regarding the DAO and D. I am lawyer from India, and thank you, Batuhan, and I'm sorry if I'm like pronouncing your name a bit wrong.
Yeah, it's
Thank you,
fine.
Batuhan and Asena. You
Thank
gave
you.
a really good presentation. And okay, as far as we are working as Conma DAO here in India, we are an organization, we are running a community, and basically what we have felt over the year or like or over the past 2 years that we have been working and understood the dynamics. We take DAO as those that uninitiated company that is they're working, it is existing because this DAO is holding its own wallet. So I cannot say that it is going to be taxed in individual hands.
Yeah.
Because the DAO is doing its own work, DAO is getting its own fund, DAO is doing its own expenditure. So from the Indian taxation point of view, what we have understood is that our government is taxing everything at 30% flat on crypto without any consideration for the long-term capital losses or long-term gains or whatever. They are just saying if you have gained something, give us 30%, and you are free with it. But as far as we understand the DAO working, we take it as business. Because what DAO is actually doing is taking the funds, developing the projects, and it is kind of running like a corporate, but an uninitiated one. So we do not like all the investments that we make with the DAO funds, they classify as investments, and if we sell them off in the near future, we will take that up as capital gains. And what we are doing and what we are doing on the daily basis, the funds that we receive or spend, that we treat as business. So that is like our consensus here as of today. Yes, the DAO and DA definitions need to be sorted by the governments at the global level. We agree with that, and probably I think all of us are on the same page regarding that. But as far as DAOs are concerned, if I am to say it is going to be on the individual level of taxation, that cannot happen in our structure because no one is doing project for themselves, but for the community as a whole. And it is being funded by that same wallet that DAO is able to run at.
Okay. Well, I would be glad if we can add this information to our document as well. Maybe you can. Sure. Yeah, maybe you can help adding this to the document, or we can talk about it later on, and we can do it together. So it'll be helpful for others as well. So it's very different on my end, like to see how the countries behave regarding the taxation of those and DAOs and other companies or self-employment.
Yeah, because
situation.
It is an ever developing field, and this is a huge level that needs to be,
It is.
That needs to be, groomed well by everyone, like all the lawyers of all respective countries, according to their own constitutions.
since we don't have any regulations or an approach about DAOs in Turkey yet, and there is no DAOs in Turkey, like really, we cannot point one, or we cannot make an example of it yet. But I think at some point it can be same. The approach can be same. So it will be great if we can have what you said.
Actually, it gives me immense pleasure to tell you guys that we at ConmoDAO have been working on this legal project, a legal DAO project for something like
we
this.
can also talk that about, yes, we have a proposal on that. We're going to talk about those, so we can maybe do that on there. That's fine as well. That's perfect.
Like we can arrange a meeting, and if all of us in consensus, we can develop into the future.
Yes, sure. Thank you.
Nice. More connections with Karma. Love you guys.
Yes, thank you.
Chakan, we never be so happy if he was here.
Oh, man.
I have a quick question. How does the government know if I don't connect my wallet to like a centralized exchange and all my life is just like Ethereum or Cardano and all the native assets on that specific blockchain? I never like converted to any specific fiat currency. Then would I still be taxed?
Well, some countries do tax changing cryptocurrencies. Like if you transfer it to another cryptocurrency, it can be taxable. But those countries should be following your transactions, such as like IRS, such as MASAK in Turkey. So it depends on what the country's approach is for that. For example, if you are a provider for cryptocurrencies in Turkey, you're obliged to how can I say this? You're obliged to report to MASAK, and only Turkish individuals can use that provider because there's a QIC. So you send your passport or you send your licenses in order to use and receive the cryptos that you're going to use in your wallet or transfer it to another account. If not, you cannot withdraw your money. So you have to be confirmed by the government as well. So if you are not Turkish, you're not able to use the providers that are providing those services in Turkey. So that's like actually another issue for Turkey and maybe US as well. I don't think US is on that point at this time, but for example, another foreigner cannot come to Turkey, or not before, like if you entered Turkey one time or two times, maybe that's okay. Maybe that you can be confirmed by the government. But if you're not residing in Turkey as a foreigner, you cannot use those providers as well. So it's basically they can see your transactions, even if it's like blockchain, even if it's not untraceable to you, but it's traceable for them. So that's actually how it goes. For other countries, I would say it's the same. As we talk about European countries, they are lacking of following the transactions at this point. So it's more recommendable to do those transactions across Europe. I hope that answered your question. Yeah, perfect. Great.
To me, it feels like if the governments can't track us on Cardano, on Ethereum yet, they will very soon be able to just build an AI on top of it, and they'll be able to identify us like everywhere, unless we have some really high privacy coins to lose your track. Like then you'll be able to lose your track, but still, you're going to be identified most of the time, I think.
Yes, exactly. So I think everything's going to change once they bring a QIC to all over the world. Someone would find a way, I believe, but we will see what happens.
So I have a question. So we get paid in ADA. Yes. So how do we compute our tax if our ADA is always moving? It's so volatile. I get paid at some US dollar equivalent. Is that the price to compute the tax? But then the ADA value goes down. Does that mean my tax goes down?
No.
Or if the ADA value goes up, does my tax go up? How does that
No,
work?
it's actually, as I said before and during the presentation, it's actually based on the time that you receive it. So the amount when you receive is certain, and they're going to follow it for your tax rotation. I don't necessarily know how they go back to that time and see when you received it. Maybe it's actually pretty easy to determine, but that's what they do.
They will actually use your inward receipt into the wallet for the taxation purpose.
Yeah,
Because
maybe.
whenever they are going to do the scrutiny of their returns that you're filing, they will ask you for that wallet statement to
Yes.
know when you actually got it and at what date you got it.
Yeah, so even if it goes up or goes down, you will be taxed based on the time and the date that you receive it. So that's the answer of the question.
Okay, thank you.
I add to that?
Sure.
Just another question. So that's considered income tax, but then let's say the value of that income increases. Is it also applicable for capital gains? Like, so one, you get a tax by income, but then
Great
that
question.
value increases. Do you also get taxed for capital gains on top of your income?
Well, there are taxation on gains. Well, in Turkey, maybe Batuhan can answer to that, but necessarily when you receive it and it's taxed from that amount, maybe it is separately taxed at this point. If you have a lot of profit on that, maybe that can be subject to tax, but I'm not 100% sure at this point.
In Turkey, there is no specific legislation or rule that we come across in this matter. But in different countries, actually, it depends on the nature of your income. I mean, the first time you receive that crypto, it may be subject to income tax. But if you don't dispose it, and for example, stake it for 2 years, then it will be subject to capital gains tax. In taxation, please focus on the nature of your transaction. I mean, it's an income. If you receive it as a income, then there will be income tax. But if you use that income as an investment or something else, then there might be other taxable things. If that answers your question.
Well, it's
Yeah.
a bit of gray area. Yeah.
Yeah, in the US, that's my understanding is you get it and then it turns into capital gains and loss if you don't exchange it within 3 to 10 days, I think is the limit. And then it turns into that. So it's.
Yes.
And
Okay.
also, it would be great if you're from US or if you're from any European country, add to what happens in your country. Since we just kind of like talked about the law, but the implementation may be different. So it'd be helpful for us to understand how it goes down as well in practice. That would be great.
And Chakan shared the document in chat. You can see that.
Yes. For example, if you have anything remotely contrary to what the law says, it happens in Turkey as well, by the way. It all happens everywhere. So there might be some rules and practices. So if you have any comments on that, it will be helpful for us to also understand what goes down there.
Lucas had a question for a long time.
That's fine. So coming back to what Shakan was saying, that the crypto is valued at the moment you receive it, and then it's recalculated or revalued at the moment that you need to file a tax. You may have ups and downs. So to value all those things, like I said, I worked a bit in accountancy, and I've also worked in a crypto accountancy tool that what they do, and this just goes to say that there are tools on the side of the government that, like Nikili was saying, sorry, they can investigate your wallets. But what also happens, I think, on the American side with the tax reporting is that you're obligated to convert all your crypto assets constantly to dollar denomination. and then declare those movements. So
Yes,
what
that's
I'm
true.
just trying to share this insight in terms of there's also a lot of tools available to holders and traders where from our side, we give our wallet addresses to this software. This software goes and does an inventory of every transaction we did on on chain and gives us back a statement that we can file in QuickBooks or that type of software. So I think this is something that I'm going to try to put together as tools. Maybe we can even eventually we're going to have something more like we say on chain in Cardano, where this company I worked in was cross-chain. So they run Ethereum servers, Cardano servers, Bitcoin servers, and they get all those things directly from those nodes. But inside Cardano, because we are just focused here, it wouldn't be completely unthought of just creating a solution for ourselves where we don't, because those companies are charging thousands per month. They actually charge you by the transaction. So if you have X thousand transactions or something, you may be paying 1,000, 2,000, 3,000, and it accumulates. So the more transactions you have, the more you're going to pay on the next month, even if you didn't make movements on that month. So I just want to share this type of insight with you about the tools, and hopefully we can keep in touch to mature. At least that's what I'm planning to do, sort of start my own consultancy here in Portugal around local law, to partner with local tax organizations, and to find solutions of this kind.
Okay, perfect. Thank you for that insight. It's very helpful for us as well. So again, if you have any, like if you do additions to the document, it will be perfect for us all.
I have one question. You mentioned several times like income, like the things, the payment that we are getting from the Littlefish Foundation is considered an income. However, what is an income? Like ours is mostly a reward, and we are very specific on the vocabulary of that. Also, Cardano, when provides the funds, also regards it as a reward. So given that gifts are considered non-income, like non-taxated incomes, I don't know in Turkey, but IRS does that. So how does that affect? And because we are doing transactions peer-to-peer, so how does that affect the situation?
Well, as I couldn't recall, gifting in US and according to IRS isn't tax-free, but I know that donating
and another category are tax-free, like by IRS. But what I'm trying to say is that we are income means it needs to be like something stable that comes, I don't know, in a year, a specific amount, right? But ours is not like
necessarily,
that.
No, you can have an income regarding a service that you provided for one time, and we're saying it's rewarding. With the definition of the wording, rewarding is said between and by us as a community. But if you go to a tax office, this is a rewarding system, they wouldn't be considering that as a reward at some point, because what we considered that this is also we're doing a work here at this point. Yes, we are getting rewarded for this. But for example, as voters, you vote for that. As proposals, we conclude proposals for that, and this can be concluded as services or work at any point. So I'm just saying that it is possible that it can be taxed.
So I was saying that sometimes for the work we do, it's not like anytime we are going to get a reward or a fair amount about that, right? Like yes. Most of the work, like what I'm saying is the term is very broad. So how would the government make the difference between that? Like, is it taxatable or is it not taxatable? Because if it is for us, then it would be taxatable for blockchain as well. Like Cardano, who provides the funds, is going to need to pay a tax to the Turkish government, and that's problematic.
No, well, Turkish government, if you have a company resides here, yes, you can be subject to tax. But if you're not here, it is not taxable on your end at this point. That's true. It's based on jurisdictions as well. It's a very complicated topic, I know. But since what we saw from those rewarding systems, you do provide something in return. at this point. So if it's not, it cannot be considered, in my opinion, this is my opinion. If anyone has something contrary to say to this, please step up. But in my opinion, well, you're doing something in return of something. So it's not necessarily gifting. Also gifting cryptocurrencies in some countries, as I talked about, maybe I can find it again. I don't remember which country it was. It is still taxable. Even if you gift a cryptocurrency to someone, it can be subject to tax. So yes, we're trying our best to avoid this. Batuhan, go ahead.
The thing is, there is a misunderstanding, I believe, because income is generally a general term. There are different types of income. For example, in Turkey, there are 7 different types of taxable income. And self-employment income is one of them. So I believe this communication or misunderstanding between us and Donald is coming from this. The American definition of income may vary from Turkish definition, and what types of incomes they defined may result in different tax consequences. I believe that's the problem.
No, that was not my point. Like I was more interested in the phrasing of the problem, because for example, if we don't deliver one part of the project in the next month, we are not going to get the reward share from the Cardano like for the next month, right? So how is it going to work if we are going to pay taxes, for example? Like
it doesn't
those taxes are paid
if you don't receive
right?
the payment,
like annually.
It doesn't necessarily have to be all months. Like one time you receive, for example, you're a freelance worker. You did that. You did an agreement for 3 months with a company or someone else, and you provided services for that. For 3 months, you earned something, and then it ended. This is still taxable income because it's an income. It doesn't have to follow up. Like you don't have to earn it all the time. But if you're providing some service and you're gaining something from it, then it can be subject to taxation. That's what I was saying. If I'm not if I didn't understand it.
I got the point. Like it's
also the wording doesn't really change anything sometimes, because the public authorities tend to examine the situation and transaction themselves and say that it's a self-employment income or capital gains tax. It doesn't really matter what you think of it. You may say that's a self-employment income, and public authority may find it as a capital gains tax. Then they will be charge you in accordance with the capital gains tax. The wording is not everything. People make that mistake a lot, but it doesn't really change much.
One question that Donald's point arose for me was the funded proposals, they are grants. At that level of Cardano sending the funded proposer, the funded amount, that is a grant, that is not taxed. Am I correct? So
yes.
It is a grant, so it's basically a donation.
Yep.
That is not taxed, right? And when we make the payments to the individuals, that is taxed as income tax. Or is the grant taxed as well and we pay tax twice?
You shouldn't be like, you probably wouldn't be subject to taxation twice. They are trying to avoid taxation twice. But what you're saying is donations are not subject to tax at some countries. That's true. But we have to get deeply in that in order to understand how, under the name of donation, it is done. So
Okay.
We have to talk about this more, I think. Yes, I would also like to receive any questions that may not be asked or like came across your mind during this meeting, during this presentation. You can also add it to the documentation and we can move forward with that as well. Yeah, donation is not taxed according to a lot of countries, so that's true. But
What I
we have
meant
to.
by gift was donation, actually, like gift.
Oh,
donation.
okay,
It
okay.
was, yeah.
Okay. See, the terms are differentiate from whatever we're talking about sometimes. Yeah.
Are grants taxed in the Turkish tax law?
Are you talking about donations?
Grants.
Grants.
So if I apply for a project for like 100,000 Turkish liras, and this fund is created, I won the reward. They give me the 100,000 Turkish liras. Do they pay tax on top of that? It's a grant. They're just giving me the money to do whatever I want with it. I just want some project. Does that mean that the amount is taxed?
The grants and donations are, in some cases, taxable in Turkish law, depending on the amount and the nature of the donation or the grant. Yani, it depends on the situation.
So this is
Or
similar
specific
to a VC. Do VCs, when they invest in some company, are they taxed? So when they buy equity, they're taxed.
Actually, when you buy shares, if you're saying like putting investment to companies and acquiring shares from that, at some point, if it's actually a different topic, but if you like the shares of the company is held by the shareholders over 2 years, it is not taxable. So you can put your investment with no tax at all, but it depends on the company shares and how long you held it, for example. That's very different from what we're talking about. But it's another regulation under the law regarding putting in investments to companies.
I make the connection because it seems to me like this is like a seed level startup.
Yeah,
and that seed level startup is like the investment comes in, but the investment is coming in as equity, buying equity, and our situation isn't like that. So there is some similarities, but I guess some differences as well. Yeah, Lucas.
Hey, so I'm not sure how long we have. I understand maybe we're a bit over already. So obviously there's going to be a lot of advice going back and forth with Asena and Batuan. I just wanted maybe to change the mood a bit and ask you what made you want to look into these things. I heard Nikhil say that maybe they're starting at the legal DAO. Is that correct?
Yeah,
that's true.
Yeah.
Yeah.
So could you talk a bit about maybe that type of, from your point of view, because you're getting yourself into some trouble, and quotes, obviously, trying to work with all these clients. They don't know what they're talking about and the law is not defined. So can you talk a bit about that?
Yeah, I can. Okay, what was our basic intention was that a lot of clients were coming up, a lot of external projects and collaborations were coming up where they were from other countries and some were from India as well. They did not know what how the crypto is taxed, like what is actually the basic definitions of taxation things regarding investments, capital assets, everything. So they just wanted someone to be there to make them understand in layman terms. Like for example, there was this external collaboration that we were supposed to start in Africa. So they were not like well versed with the tax laws and everything. So we thought that we need to make a legal DAO which will have members from across the globe, basically a global community, so that we all can help each other, like we all can give work to each other as well. So that was the basic intention and idea, to spread the legal knowledge, to make the legal Cardano community grow, like on a global scale. So that was our basic intention, and for that we started working. We actually pitched it as a proposal in the last fund round, but due to unfortunate circumstances of the voting scale, we could not actually get the fund out of it. But our basic intention was to get into the scheme of things, let everyone start talking about the laws that should be there, because there is a lot of ambiguity regarding certain provisions regarding DAO, day, or what we were discussing earlier. For example, if Littlefish gives the bounties to the people they're working with, or give out as rewards. A lot of organizations are doing work on that basis. So to make that understanding simpler, to make the voice of the crypto community heard to the governments as well. Maybe in the long run, that is the future goal. So we are just wanting to make a community that can like voice its opinion on a global level, or like make the voices be heard to the into the governments, and make it as easy and as simple as possible for the people who are getting into the ecosystem of Cardano or other cross global chains or anything that has to do with blockchain and all the crypto system.
That's very cool. Can you drop in your links? We would like to join this community of yours and come in and ask
Yeah,
some legal questions to muddy the waters
yes,
even more.
sure. Yeah, surely. I will ask Vinay to like catch up with you regarding this. He will invite you to the Conmahood, and we will catch up there as well.
Okay. And from the Turkish side, I'm curious as well.
Thanks for the question. Actually, we started to take interest in this field thanks to our founding partner, Mete Tevetoglu. He's associate professor in Maltepe University, and he's the leading attorney in this area. And as young minds, we were actually very interested in the cryptocurrencies and new technologies. Also, I am doing my PhD and master thesis in this area. It became my life. Actually, it's kind of frustrating at this point. Sometimes I see this kind of topic in my dreams, and actually it becomes a nightmare. It's kind of frustrating and hard, but we are grateful, and it's going great actually. We are working with many different people from very different backgrounds, with original topics and creative and original problems, which requires us to come up with new and creative solutions. And actually, for me, it's kind of boring to work on typical legal issues.
Agreed.
Like criminal and other procedures. It's actually more funny, and I'm grateful to work on this
That's
topic.
great. That's great. So are you actually using Cardano, or how does it work for you personally?
Not personally. I'm not
Okay.
using that personally. Actually, I'm not really using any crypto assets or currencies. I am more focused on its legal side and nature, but I'm trying to be more familiar with that.
But for example, you have the distinction between the centralized exchange, the DEXs and all those things, right?
Yeah.
And you never really had the curiosity to put in a few units and buy 1 ADA, 10 ADA, something like that?
Actually, I had some crypto assets in a centralized platform back in 2 years, actually. And it was to see how the system works, how the platforms take money, give money, how to transfer crypto assets, and etc. It's
okay.
It's for me.
Yeah, it's to say, because I did this journey for the past 2 years. The first year I was just on Binance. And then I had, because I'm on the IT side, I had to decide on continuing my career. And I decided to learn about Cardano. And now I don't use Binance, I just use on-chain. So a lot of people are going to go through that transition. In terms of the audience, your clients and companies, my consultancy that I'm trying to set up is to circumvent completely Binance and to bring companies straight on board on-chain. To take payments, to take donations directly on chain. So there's not going to be, someone was talking now about how do we share crypto and etc. And I always have that almost the t-shirt, pay me in crypto, because if everyone's paying me in crypto, if you have the whole economy more running on crypto payments, you exchange services for crypto and goods for crypto, there's not going to be always that going to fiat on and off ramp.
Mhm.
So it's just something that I want to share with you in terms of insight for the future. And also, just so I don't take over all the time, there is an initiative that I'm running to train people to use Cardano hands-on. And we actually have one person from Littlefish with us. She is planning to start a class just in Turkish. So
Oh, wow.
I'm gonna
Okay.
try to share the link on the chat.
Yes,
and
please
I'm
do.
sure-
I need that education for myself.
Great, great
I
stuff.
do.
I don't want to speak on her behalf, but I'm sure that I know for a fact that is in the plan. So I
Yeah.
want to leave you with our contact there.
Yeah, that would be
Thank
perfect.
you. Thank you.
Thank you.
Great, great to help.
Yeah.
I think Asina can also answer that question, and then we can wrap it up.
Oh,
better.
yes, of course. First of all, I like trouble. So that's me. That's why I kind of was like on with this project. And I really like the way the community acts. And even right now, we have, I acquired great networks and great connections at this point. So I think the point of the community is a great point that I would like to be contributing to. So, and also the topics are pretty fun for me. And since I have the basic knowledge, I like to learn more about other countries, since we talked about them a lot. But you all already know, if you're a lawyer in a simple in one jurisdiction, it's hard to understand other laws. So this actually helped me through understanding other regulations in other states as well. So it's actually very good for me to be here and having those questions. And I also have some questions, maybe at some point, maybe I can put that down on a document. So it's like, I like being here, and it's like very helpful for me and for all of us. That's why I am here, I can say.
Thank you, Asina.
Thank
Thank you,
you.
Batuan, for coming in
I'm sharing
here,
my thoughts as
teaching
well.
us, making us sound happy. We don't like what
Sure.
we heard, but what are you gonna do?
I hope you all enjoyed what you
Yeah.
heard today.
That's one thing that I think I would like to share as well, that currently everyone is setting the bar at 40%, 30%. Portugal, we have 28. But I
Yeah.
tend to think, I don't know if you agree, but I think there's going to be a race to lower numbers between countries competing with each other. So let's hope for that, to answer
let's
Chakan as well.
Oh
Cross
man,
fingers.
hopefully. Thank you, everyone.
Thank you all.
Thank you. It was a pleasure.
Yes, it was a
And
pleasure.
we'll be doing 5 more of these in the coming months.
Yes.
So
Yes, so
Thank-
we will be
thank
seeing
you,
each other a
everyone.
lot.
Thank you, everyone.
Okay,
for
great
letting us-
stuff.
Thank
Thank you
you.
so much. Bye-bye.